Hi guys, welcome back to um, the weekly analysis for the NASDAQ 100. This week we will be starting from Sunday, September 14, going up to Friday, September 19. Those of you who are new to the channel, this is where where I actually discuss my predictions based on what I'm seeing from past trends, um, to determine what I'm expecting on the market for the upcoming week. So before we begin, let's just pray. God, we just give you thanks and praise for another opportunity, another week to trade and to analyze and to prepare to earn. We ask that you will be with anyone watching this video. We ask that you will help, that it will be instrumental. Thank you again for your blessings, and may we all achieve success together. We thank you in Jesus' name. Amen. All right, guys. Broken record time again. As you know, eternally bullish on the NASDAQ 100. That means the NASDAQ 100, based on historical data, has always made higher lows to higher highs. And that's when you look at your largest time frame. So you look at your monthly and downwards, you'll see that the market has always made higher lows to higher highs. You will also note that I have gone ahead and I have done my charts. I do my charts every single week. And as you will notice, I have my blue weekly separators, weekly dividers, and of course I have my daily separators. That way I'm able to track what the market does at what point, and I'm able to see when the highs and the lows are made and everything. If you need help with understanding how to do these lines, I do have videos posted on the YouTube channel that actually shows you how I actually draw my support and my resistance lines and my dividing lines to help me with this analysis. All right. So moving quickly into this week, because I want to get into a number of things if I can remember to do all, right? As you know, the market is 100% bullish. We have established that from from forever, right? Last week, this is what happened in the market last week. Now I'm currently on the 2-hour time frame, but if I jump down to my 1 hour, you'll see a bit more detail on this. If I go to, of course, my 15-minute time frame, you'll see a whole host of data supporting this bias last week. There are just so many opportunities that existed on the market last week, depending on the time frame that you're looking on. But as you know, I like to stick with my larger time frame. So 1 hour and above. But I always like to start from my monthly and work my way down to my smaller time frames. All right. So on Friday, the market finished at an all-time high. All right. It's coming from an all-time high on Friday, which it actually broke several times throughout the week. The first one being on Wednesday, okay? And it continued making higher lows to higher highs ever since, okay? Now, you will remember, those of you who have been following the channel and following my videos, you'll remember that I exited my last trade on Thursday, and I did not go back in another trade for the buys, until now. I'm not going into any buys right now because I still believe that the market is, in fact, retracing. Okay. Now, I've always said this: if you're not comfortable taking sells, you should not be in a sell right now if you're not comfortable with it. Now, some people, will take sells based on what they see the levels are doing and based on the fact that they know that the market is guaranteed to make another higher low so that they can go to a guaranteed higher high. Okay. It's a very risky move. Okay. It has not always played out the best way for me personally. So that's one of the reasons why I am always leaning towards my buys. Okay. Now, with that being said, where the market is at, I did not take this higher low on Friday because, again, I see that the market is at an all-time high. Okay. Which for me, I'm expecting that the market is going to correct. The market needs to create a higher low in order for me to go towards a higher high. Okay. Now, on Friday, this higher low that was created only registered on the 1 hour. Now, being that it was Friday, I chose not to take it. It was Friday, it's the end of the week. I did not want to take this higher low because I personally feel that the market needs to do some amount of retracement before continuing again. And I'll show you based on the analysis tools that I'm using why I think that is so. Now, this week right here, I mentioned in my review video, and if you have not had a chance to see the review video, go back and watch it on YouTube. This week right here that was created on Thursday's 8:30 inflation data report that came out was actually an unregistered low that was created on the 45-minute, the 50-minute, no, sorry, the 45-minute, the 30-minute, and the 15-minute, and it did not register the low that was supposed to be registered. Let me show you what I'm talking about. On the 45-minute, here we have that wick. It broke this previous higher low, which means, and it's coming from a high, which means this should have been a new low. It did not register it, and that usually happens when you have days, when you have big reports like the inflation data on Thursday, and you have increased volatility. Okay, so it did not register it. It also did not register it on the half-hour time frame. Same scenario right here. It also did not register it on the 15-minute. Okay, this is the wick right here. Okay, now what that means is from my analysis perspective, all right, this wick at some point in time is going to need to be retested. All right. So that is one of the reasons why I was cautious about taking additional buys. That um, um, in relation to the fact that it was also Friday, no need to try and stretch the buys when I know that the weekly candle is going to be completed, the daily candle is going to be completed, and then all the other candles below are going to expire around about at 4:59 p.m. on Friday. So I did not want to take that trade. Right? Right now, I'm looking at the market retracing to make the next higher low. All right. Hope you understand that concept. So if you are new to trading and you don't have the experience, my suggestion to you is that you wait for that largest higher low like we have here, and then you buy to your higher highs. Go to a higher low, buy to your higher highs. Okay. That is what I would recommend. It's 100% bullish instrument. That is what I'm expecting the market to do. All right. Now let's get into it. Now, a couple of things that I'm looking at. Now, those of you who have been following me over the years know that I rely a lot on my fib levels. All right. I use my fibs in different ways, whether it's a buy fib or a sell fib, whatever. I use my fibs in different ways because those levels are extremely reliable, especially when it comes onto the NASDAQ 100. All right. Extremely reliable. And you can always backtest this for yourself and see what I'm talking about. Now, this fib that I have here was drawn, I believe, on my daily. Let me go back and check it. This fib, no, it was not on my daily. Let me see on my 23-hour. Oh, I got that fib. That fib was the last high to low that the market created. All right, this fib that I have here. And just bear with me a second. Let me look at my 11-hour. No, I wasn't that. Let me see my 4-hour. I hold on 1 second. That fib was trying to see what time frame I drew that fib on. Oh, let's see, weekly. Second, let's see, 100% mark. Okay, so it has to be, just bear with me 1 second. This fib was still validated back. Okay, yes, it was my 2 hour fib. I'm sorry. So it was my 2 hour fib that I had drawn. It was a buy fib, and it came from the last higher high on this time frame here on the 2 hour time frame, and it came down to this low. Now, if you look at your 4 hour time frame, here we go. 3 and the 4 hour time frame. Okay. So your 3 hour time frame was the last higher high to low that you had. Okay. So I drew my fibs right from this higher high to this low. So this is my 100%. This is my 0%. Okay. Notice the price has consolidated between these 2 points before finally breaking out of these points last week, Wednesday, I believe. All right. And continuing up to this point. Okay. So this fib has not been exhausted as yet. Okay. And that is one of the reasons why you'll notice that I have my take profits. In some of my previous videos, I posted my expected take profits in the future. Okay. So last week, if you looked at my video, I did mention that I expected first take profit to be here, second here, and then I had a third here. I think I had one in between or something like that. All right. Now, your expansion levels are always going to be your take profit zones. So I expect price to reach here, which is at the 161.8%. And I expect it to also get to 261.8% at some point in time. When it's going to get there, who knows? But the market is making higher lows to higher highs, so they will get broken. Every single high on the NASDAQ 100 has been broken and will continue to be broken. Not so with the lows. The lows always fall higher and the highs always go higher. That's why you have the higher low to higher high pattern. Okay. So this was the fibs that I had here on my 3 hour, 100% to 0%. Take profit levels are going to be anything above here. It's going to continue going up. Okay. All right. Now that we have that set, this is the master fibs. This is the fib that is going to be respected until the market gets back in trend. Now, if you notice, I have this channel that I have drawn that has been coming from, a couple months back. Okay. Notice the price has been respecting and trading in between this zone. Now, if you notice, you had a break, and that is why I have this secondary trend line that I've that I've drawn here. Okay, and actually connects the two lowest points right here. Price came down, it broke back up, and it's been threading this lower level fib line for the past number of weeks, almost a month. It has been trading on this fib line. Each time it goes up, it comes down. Each time it goes up, it comes down. Continues to do that. The price will continue to do that until it finally breaks above this trend line. Now, one thing you'll notice about trend lines is that once you have a trend line here, the longer the price stays in this region, is the higher it will go in order to break that current trend line. Same thing with your upper trend line. The longer price stays down here in this area, is the higher it will have to go in order to break the trend line or to even touch the trend line. Okay, so that is one of the reasons why you understand the movement of the price. It is 100% bullish. It's consistently bullish, and it continues to go up. Of course, during that going up, you do have periods of retracements. That's how you get your zigzag pattern. Okay, so you go zig, zag, zig, zag. There's a video that I have posted on my YouTube that actually outlines the whole concept of the zigzag theory. Okay. So with that being said, this is the master trend. This shows you that the price clearly is respecting that 100% line that we have drawn from the 3 hour time frame. Okay, it has respected this line right here. Okay, now what you will notice is that the price is consistently moving towards these upper levels. Okay, all right. So that is how I got the whole master fib level. Okay, now during all of this activity that's happening between the last high and the low, okay, there is also, remember, your smaller time frames which have activity that needs to be tracked in order to be able to trade them correctly. All right, so let's go to the 2 hour time frame, for example. Okay, I want to show you something. So here we are on the 2 hour time frame. We already know that price is going here. All right, this is my next TP level. Okay, price will eventually get here. So we know that. And we've seen that because the market has been making higher lows to higher highs consistently towards that level. Okay. Now, how do I get my entries? What am I looking for? Remember, I said to you that because the market is trading at all-time highs, I'm expecting some level of correction to happen. Okay. Now, if you look here, within that master trend, okay, this was the last higher high and then last new low that was created on the 2 hour. If you look at the 1 hour, that's going to be equivalent to a lower low. Okay. All right. Let's be clear on that. So we look at the 2 hour time frame, and I'm here. This is the last higher high to low. Okay. It broke the structure right here. Okay. But it went right back in structure. It was a temporary break, went right back in structure. Temporary break with this new low, went right back in structure. So it broke, new low, and instead of going lower high to lower low, it went low to high. So it broke structure again. Perfect V. Break, break, continuation. Okay, let me do that again. Broke, temporary structure, signaling that the market wants to go down, but instead of giving you a lower high to lower low and continuing this way, it went break, oops, break, continuation. Okay. Now, with that being said, how do I know where the retracement is going to go? How do I track my retracement? Well, let me give you a brief lesson in the fibs. So for that, while I still have my master fibs, I'm not worried about this right now because I know the price needs to get here. But in order for the price to get here, the price cannot buy. It cannot continue buying from this high point. There has to be some amount of correction that has to take place in order for the price to come back. Now, I've said this before and I will say it again. Every time you lose a trade, 100% is because you're not patient. Every single time when you lose a trade, it's because you're not patient. Okay? There's always buys and sells in the market. Okay? The market has a bias, however, and that bias is bullish. If you go in a trade for a sell and it buys, it's because you did not wait. You did not wait for the buy to be completed so you could sell. If you go in a trade and it buys, you did not wait for the sell to be completed before it bought again. So with that being said, if you keep coming in at these levels at some point in time, and that's how traps are created in the market. They're bull traps and they're bear traps. And although the market is bullish, believe it or not, bulls can also get trapped too. Speaking from experience, it has happened to me several times. But every time when something happens to you, you have to learn from it. That's how you become better. Okay? So if you continue buying at these levels, yes, you will get away with it for a while. But at some point in time, when the market has generated enough of your stops and enough of your profits, it's going to give you a drop. Now, is it going to be the drop that everybody's expecting? Absolutely not. Every time the market sells, it's only going to sell to create the next higher low. Okay? And that's why trend lines and everything, all tools in the market are very important, depending on how you use them. Okay? So let's look at this. All right? Remember I told you it broke here. It was supposed to give you a lower high to lower low, showing you a continuation. Okay? And let me just let me just use a tool to explain to you what I'm talking about. So you'd go here. This is the break, okay, for the new low. And then you'd have a lower high and then a lower low breaking this line right here. So you'd have a lower low. Then you'd have a lower high and a lower low, lower high, lower low. Okay? That's how trends are formed. Okay? Now, instead of getting this is what we got. So you had the break right here. And instead of giving you a lower high, it went right back up and broke to the upside. Now what you have is a higher low. You got a lower high that shows that, hey, maybe it still wants to go down. But instead of doing that, you got a higher low. Now it breaks, it gives you a higher high. Then you have a higher low. Then you have a higher high. All right. So you see what happens on the market? Two different scenarios. Let me just change this color just so it just gives you differentiating. Oh, let's use red. Well, let's not use red. Doesn't matter. Let's use purple. Okay. There we go. There you have it. This is what would have been needed for a downtrend. The market did not give you that. Okay. Instead, what it did, it gave you a perfect V. So look, boom, boom, it gave you the V. Okay. So whenever you have this is a clear rejection point. Market went here, created a new low, which is what is needed for the beginning of a trend. Okay. But instead of continuing down, it says, nope, not ready to go down. Boom, went back, erased everything that it did before. Now you're back in trend. And then it went on with the continuation. All right. So that is why we have now that continuation of that trend towards the upside. All right. Hope that's clear. All right. Let's remove these. All right. So because you have this scenario right here, okay, in order for you to see what the market is going to be doing and where you expect the market to go, you have to rely on your fibs. Now we're not using this fibs because this is the master fibs. This is the fibs for the trend, for the bigger time frames. But now we need to track our smaller time frames. So with that, I pull out my fibs again. So in this time, what I'm going to be doing is I'm going to be marking from my higher high to my low, which is actually on the 0% line right here. Just so it will give you an idea of what we're working. Okay. All right. So here we have the higher high, which is going to be my 0%. And here we have my low, which is going to be, sorry, my higher high, which is my 100%, and my low, which is going to be my 0%. Okay. That's the fib that I use because I'm going in a positive direction. Okay. Now, what am I looking for? I'm looking for those key fib retracement levels. Now, if you don't understand your fib retracement levels, there's a video that I've also posted on how to use the fibs effectively. All right, how to use the fibs effectively. Now, with the NASDAQ 100, there are certain key areas that you look for within the fibs. Okay, you look for your 65%, 61%, and you look for your 78%, 78.6 retracement levels. Now, because this is a trend within a trend on a smaller time frame, okay, smaller time frames will usually use up 100% of their fibs, okay, use up 100% of their fibs. But remember, I drew this fib in the same way that I drew my master fib. Now, here's the thing with that. Remember, I'm tracking a retracement, so it cannot be the same fibs that I'm using. I can't be using the same fibs because that would mean I'm expecting the continuation on that fib. So I have to use now the reverse fibs of what the master fibs is doing. I know it's a little bit much, but stay with me. If you need to rewatch the video again, rewatch the video and understand what I'm saying. Remember, the master fibs was drawn from the high to the low, okay? And my take profits are going to be on my expansion zones, okay? Since I'm tracking a retracement, I have to use the reverse fibs. So this fib right here is not the correct fib that I need to be drawing. This is not the fib that I need, okay? I'm going to show you the fibs that I actually need, okay? So let's go here. Let's take this out, okay? So remember, I drew from here to here. That's not the fibs I need. What I need now is the reverse fibs of what's happening. So, with my fibs, then instead of starting here to here, that would only be true if I'm expecting that downtrend move. Now, what I'm doing is I'm tracking the retracement, so I need to use my reverse fibs. So I'm going to start from this low point, which is where the low was created, and I'm going to go to where the price actually broke back in structure. Okay. Remember, I'm tracking my retracement. Okay. So here we go. Let me put this right here. Okay. All right. Now look at the difference. Look at the difference. The difference is because I'm now tracking a retracement, I am now expecting a retracement to come between my 61% and my 78%. What this says to me is that before I enter buys again, I'm expecting price to come in this level. Okay, this is where I'm expecting the price to actually go. And here's why this is significant. If you notice, since this last low, price kept going this way, all right? And it came to the minus 27%, which is an expansion zone on the fibs, which is a valid take profit level. This is where it came on Friday, all right? I hope you can see this. Let me see if I can take this off a little bit so it's clear, all right? So the price came to the minus 27% right here, which is where it created that all-time high just above it. So in order for the price to continue upwards, I'm expecting a retracement to come in this area. Is it going to be one drop? Is it going to be gradual? Really don't care. I'm expecting price to come here. And here's why I expect that. All of this open area right here, some people like to call it imbalance, needs to be filled. How are you going to fill this? This is where the move started from. I'm expecting price to come back in this region Okay. Although I'm expecting it, all right. Please don't just go blindly and enter into sells and saying, oh, yes, the market is going to drop. Remember, the market is still a bullish instrument. As such, the trend is always the strongest move. So the market can continue. Because remember, I said on Friday that, okay, fine, I'm expecting this. But listen, instead of me getting that retracement, I actually got the continuation. Am I still expecting a retracement? Absolutely. I am expecting a retracement because I need that higher low in order to continue with my buys. Okay. So this is where I'm expecting the price to come. Okay. Between the 61 and the 78% right here. Okay. Now, let's look at your bigger time frame. So if you look at your, let's say you look at your 3 hour. Okay. All right. Price would have broken here. If it comes down and does all of that, price would have come here and broken and came down and created a low and continued down to this line, if I'm expecting that. Okay. If I look at some of my bigger time frames, my 4 hour, well, price would still be here at a higher low. It's consistent with the last two higher lows. Notice that you had two higher lows that were oversold right here. Okay, and it came right down to the trend line. So it's not outside of the norm to expect something like this because you had hard retracements on the 4 hour prior. So it's not outside of the norm to expect another retracement like this. It's highly possible for it to happen. And it actually makes sense the more that you look at it. So going back to the 2 hour, this is where I'm expecting price to go. All right. Now, let me go ahead and put my fibs back on, the master fibs back on, because I want to show you something now, how this ties in with everything. All right, so if I put this back, all right, here we go. This is the master fibs. Remember, this is where I'm expecting price to go, okay? All right, now if my take profit zones are my expansion zones, and I'm expecting price to come back down here to between the 61 and 78% level, guess what? It's a nice sell that's going to come down here. If it happens in a perfect world, it's a very nice sell. It would be about 8,000 pips if it comes back down here. Okay. Now it would even be a greater buy when it goes back. So you see the beauty of waiting. So if I wait for this trade to come back down here, okay, when it comes back up, I already know that this high is going to be broken. And because this high was already broken at a minus 27%, my next level is going to be my minus 61%. And because this is measured from my minor retracement fibs, this is going to be invalidated. Now, which means it puts the market back in line with my master fibs. And the next level on my master fibs is going to be 161.8%. Hence, why I have a take profit level right here. Okay? So let me repeat again. The market came up, it did this. For the past 2 weeks, it has been buying right here. Okay? It went up. It's trading from all-time highs. A retracement is due at some point in time to create the next higher low on my larger time frame. That retracement I'm expecting at some point in time to come somewhere within this region. Another reason that gives me confidence to expect a retracement that deep is because when I look at my trend lines, okay, all of these higher lows have been formed underneath my lower level trend line, but they're formed higher than this expansion trend line, which I have here. Okay. So remember, I have 2 touches to make a trend line valid. That's all I need to make a trend valid, 2 touches. So which means This trend has already been validated because I have two lows that created this particular trend line. Okay, 78% actually puts me right on this trend line right here. So that is why I'm expecting some amount of sales to bring the price back to a trend line that has already been validated. So it's not unreasonable for me to enter that. For me to expect that sell. Okay. Will it happen immediately? Possibly. As you have known, whenever retracements happen, they happen hard and fast. And then the market takes its time to go back in trend. And that's why a lot of people get confused when they see these hard retracements happening so fast. They're like, oh my goodness, the market is going to turn around. It's going to be the end of the world. It's going to be Armageddon and all this crazy stuff. No, that's what retracements do. They go hard and fast. It's a good way to make money if you understand your retracements and have the patience and the tenacity to actually wait for the sell to be over and not over leverage. All right. So this is what I'm expecting. I'm expecting some amount of retracement before heading back in and before going to, all my targets, all-time high and beyond. All right. Now let me just take this off. Take this off. All right. So now that we've used the fibs and we have aligned with just about everything else that I see on here, right? If you notice, just go back and look. Every single time when the market actually had that sustained buy, there's always a drop to create that higher low again. Sustained buy, drop. Sustained buy, drop. Sustained buy, there's no drop. So there's a drop that is needed to create that next higher low point. And my personal belief is that I should be able to see a drop coming to this level. It would be a nice sell for those who have the balls and the guts to actually take it and wait for it to play out. All right. But just remember, when you take that sell, it is not going to be sustained. It's only to create the largest higher low to continue again. All right. And if you look at it, here goes your W. Boom, 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 boom. Okay. Guess what? Expect another one to happen at some point in time. All right. But again, that does not negate from the fact that the market is 100% bullish. It's making higher lows to higher highs. You just have to understand that you cannot buy from your highs and expect to be 100% profitable without any amount of retracements. Okay? You also have to understand that because it's a bullish instrument, you cannot expect to sell and hold and to be in profit. You are going to get your account blown at some point in time. All right. So I know this video is a little bit long, but I actually wanted to make and to stress what is it I'm expecting. All of this area of imbalance at some point in time needs to be filled on a particular trend line. Remember, the trend is your friend. Okay. If you have a friend and you have not spoken to them in a long while, at some point in time, a catch-up is due. A phone call is due. A visit is due at some point in time. This has been the trend. And since the last touch, there has never been another touch at any time. So a check-in is actually due. All right. So that is where we are right now. So for this week, okay, for me, obviously I'm not buying at this level. I'm not buying at this level. So when the market opens, this is what I'm going to be expecting this week. I'm expecting that there is going to be some sales. Okay. This was Friday's zone. This box right here was Friday's zone. Okay. The low to the high. That's the low and the high that was made on Friday. I'm expecting that price is going to come at some point in time and break Friday's low. If you look at your 1 hour, this was the higher low that was created. I didn't take this trade on Friday, but I'm expecting price to come. Now, if price breaks, if price opens and breaks this higher low from Friday, okay, then we know we have a pretty decent retracement, okay? And that's going to continue till we get the higher lows and the larger time frames. Another thing that I want to point out, this is your 1 hour. This is at a higher high. Your 2 hour is at a higher high. Your 3 hour is at a higher high. Your 4 hour, all the way up until your daily is at a higher high. And they are at oversold levels. Okay? They are oversold levels. So I'm expecting at some point in time that this market is going to go down, because guess what? All your time frames here, if you look at your weekly is at a overbought high. Your monthly is at an overbought higher high. The market is actually at a higher high point in time. Okay, there needs to be some amount of correction in order for you to get your next all-time high. For the market to continue making higher lows to higher highs, and it's now at a higher high, there needs to be a correction to make that, that higher low, so you can continue making higher highs. Remember, the market cannot make a higher high and then another higher high and then another higher high without first making a higher low. That is how you get the trend. It's called higher lows to higher highs, which means if you're at a higher high, at some point in time, you're expected to get that higher low to continue your trend. All right. So for here, I'm expecting with the market open to see some drop. Now, is it going to be heavy? Possibly. Is it going to be light where it just continues to consolidate? Possibly. Is it going to shoot up? I really don't see that happening. It's my personal view right now. I don't see that happening, only because if it was still during the week where you still had time for the weekly candle to be finished and the daily candle to be finished, then I could expect that the price would continue pushing. But because the weekly candle expired yesterday, the daily candle expired yesterday, and every single time frame below the daily expired at 4:59 p.m. on Friday, I'm expecting to see some amount of sells to create the next wave of higher lows. Look at what happened on Thursday. This is where the market finished on Thursday. Well, you may say, well, it continued going up on Friday. Well, on Thursday, this is where it ended. It came down, it made that higher low. And then it moved up to make that higher high. What is the difference between these 2 days? This was Thursday. You still have 1 full day left for the higher high to continue. Okay? So that is why now, don't be surprised if you see this market actually shoot down. And believe me, if it breaks this level right here, if it breaks this trend line right here, I expect it to continue to come all the way down to actually interact with this trend line again. All right. And if it interacts with this trend line, it's going to interact with it at a higher point than it did the last time, or the last couple of times. The last 2 times was here, started the trend. Second time was here. Notice it came down, touched the trend line, but it's higher than this time. Okay. Let's put this back. The next time it comes to touch that trend line, the next time it comes to touch this trend line, it's going to be higher than this time. So, what I said to you, 78% actually puts it right in this region right here. So this is where if there's any sustained sell that is supposed to happen to create a higher low, guess what? This is where I would expect it to go. Remember also that your larger time frames are all at all-time highs. So if the trend is going to continue, expect it to be higher lows to higher highs. Okay? The weekly time frame. Let's look at that time frame for a minute. All right, let me get some water. The weekly time frame. Let's look at that. Weekly time frame. Yeah, it's been going for a while. It's due some amount of retracement. Saw these two candles right here. Came up, didn't sustain, came back up. This was actually a higher low on the I want to say on the daily, and then shot up to here. Okay. Guess what? I'm expecting some amount of retracement. Now, if that happens, okay, again, let's look at your daily. Daily, you have all the way up to here for it to go, okay, which is basically at this trend line right here. And let's just look at something real quick. Yep, right at this trend line right here. So I do expect that price will come, you know, somewhere in this region pretty soon. All right. I do expect it to happen. Coming and breaking this trend line, touching the 0% line is not out of the question. It's definitely not out of the question. However, like I said, you are not trading. I've said in the past, you're not trading for your lows. You're trading for your highs. So higher lows to higher highs. Any sell that the market does, whether hard, fast, however it comes, it's always a retracement to create the higher low on your largest time frame. So in closing, what am I expecting this week? I'm expecting that the market will open with some amount of retracement, okay, to create larger higher lows. Now, please do not jump in on the first higher low, and then when the market continues going down, saying, oh, the strategy does not work. No, the strategy does work. You were just impatient. You just needed to learn to wait longer. Okay? Because remember, every single time frame is currently at an all-time high. If the market is making higher lows to higher highs, it includes every time frame possible. So you need to wait on your time frames, wait for your candles to close before you jump into trades. Learn to wait. All right. Last thing, as I mentioned to you, when the market opens tomorrow, that's not the time you want to be jumping into buys. You want to wait. Wait for the retracement to be over. You already saw when we apply the fibs, and I'll do it again just for the benefit of those who need to see it again. Fibs from the low to the high, and this is just rough, right? Not precise. Price came to 28%. Sorry, minus 27%. Okay? Expecting some amount of retracement. A good retracement would actually take out all of these higher lows, okay, and bring it down into the region of where we had the last low. That would be a true higher low. And putting it right here at the 78% in relation to the trend line, that could actually carry it right through until Friday of next week. So you may see a bearish week for next week, or you may see a bearish retracement that lasts for a couple of days. All right, or you may see a bearish retracement that lasts for a day. But always remember this: Mondays, Tuesdays, and sometimes Wednesdays are consolidation, retracement days to set up the major move, the major trend move of the week. No, excuse me. Let me just check to see what major reports are coming out next week. As you guys know, I don't trade the news. Okay. I'm aware of what happens in the news and everything. I don't trade news. So which means I'm not waiting for news to get into the trade. I trade market structure. So if the structure presents itself before the news, fine. If it does not present itself until after the news, fine. I wait and I go in. Once the structure has confirmed what I'm looking for, that's when I take the trade. So for next week, Monday, nothing significant on Monday. Tuesday, got some PMI information. Wednesday, in terms of major news, some home sales, initial jobless claims as usual on Thursday. And then, of course, on Friday, you got PCI and, so yeah, you got some stuff here that is going to create some volatility for you during the week. So it's important that you trade wisely, trade smartly, use your risk management, don't overtrade, and just learn to wait. All right. 78% is here. That would be a very good buy entry. That's a buy entry that you could actually go in and be proud of yourself and hold once you have that confirmation that the market is done its retracement. Okay. So please monitor it carefully, monitor it wisely. All right. Don't rush your trades. Be smart about it and understand that the market is currently prime for a retracement. The market is prime to see those levels taken out to create the next higher low. So do not rush your trades. So with that being said, guys, this is all I have for you this week. What I'm expecting the market to continue making higher lows to higher highs, okay, which is the trend. But of course, in order to make a higher low, you must understand that there needs to be some amount of selling that will take place. If you don't understand your sells, please wait for your next higher low and continue to buy. Okay? If you are selling, understand that the market will sell, not eternally, only till the next higher low. You take your profits and then you go back with the trend. Thank you again, guys, for watching. God, thank you again for your blessing and for your goodness. May we have a wonderful trading week and may we continue to be successful. Thank you again, we pray. Amen. Sorry, guys, I know this was a lengthy one, but I just wanted to stress those points just so you could understand what's going on. All right, take care, and I'll see you again soon. Bye-bye.